Good evening, everyone. Thanks for inviting me along to talk this evening. I've been threatening to do it for a while, but circumstances keep getting in the way. So just by way of introduction, my name's Brian. I've been a landlord for over 20 years. It sounds like a session of Alcoholics Anonymous at the moment. But about 15 years ago, it became my full-time job when I opened a reasonably large 695-bed purpose-built student accommodation block in Newcastle on behalf of a business called Domain. And that was back in 2005. And that's just off New Bridge Street. So that was my first venture into this sector. And I've grown up with purpose-built student accommodation over the course of the last 15 years. And I was involved in the beginning of a business called Liberty Living. And then I founded a business called the Student Housing Company back in 2011, which went on to become one of Europe's largest providers of private purpose-built student accommodation. And then about 4 years ago, I joined a business called Roundhill Capital, which owns Neato Student. So I'll not bore you for too long, but Roundhill would classify themselves as a leading global real estate investment manager. They say real estate because the founders of the business are American. We would call it property. Roundhill's been going on for about nearly 20 years now, and they've deployed over $10 billion of capital into a variety of asset classes, primarily residential in the form of what they would call PRS, private rented sector, so rental accommodation around Europe. And since 2012, they've been actively involved in purpose-built student accommodation. So we would see ourselves very much as fully vertically integrated, by which I mean we raise funds, we find opportunities, we invest in them, we develop them quite often, we asset manage them, which is to effectively grow the NOI, buy buildings, sell buildings. We manage them, and we have recently launched a ventures fund where we invest in so-called prop tech, which is that sort of where technology meets property and to make it more efficient. So what Martin and I thought would be quite interesting to talk about today is a bit about the student accommodation market. And as a Geordie myself, who sat here in Pontyland and not traveling all over the world like I normally do for the last 12 months at least, it's been really interesting talking to a lot more locals than I would normally be able to speak to, who are kind of saying, look at all these great big blocks are coming up all over Newcastle, and how can people still be building these? There can't be that many students, can there? And I thought it might be interesting to show some insight into how investors are looking at this and why we're finding more and more of these blocks popping up, and indeed a bit of a glimpse into the future. So I accept that some people on the call will see this asset class as the enemy to people who rent out rooms to students in Jesmond or Heaton or Gosforth or have done in the past. But it's really interesting to me to kind of maybe let you peek under the skirts of what's going on in the mindset of the big investors. So I'm going to whistle through it a little bit because the time's marching on. So Roundhill, just to give you an insight into some of the investors that we work with, some names you recognize, household-ish names like KKR, TPG, and Blackstone, who are the world's largest private equity company. But we work with sovereign wealth funds like National Bank of Kuwait. Don't go to Kuwait, it's horrible. Mubadala, who are the Abu Dhabi Sovereign Wealth Fund. Dial Capital, Stepstone. So a bunch of these guys, some of them are household names, some of them aren't. AXA, massive French insurer, Quadrial and Ivan, Cambridge, or some enormous Canadian pension funds as well, who in many ways their objective is to match their pension liabilities to underlying property investments, and that's why they like student accommodation. So we're invested across Europe. We operate right now about 7,000 beds. We're building about 3,500. We've got about just under $1.5 billion of student accommodation assets under management. That this pattern of joining a business, growing it to a large student accommodation business is the journey I've been on now 3 times, and this is the third time I've experienced it. But the first time I've been effectively running the whole show. In this case with Roundhill. So marching on, Roundhill own a business called Neato Student. So some of you who are landlords in the city centre will recognise Neato Student. We operate about 800 beds in Ousburn, or Shieldfield as we would have called it in the less trendy days. And we have about 800 students over here. So that's the slide slightly out of date, but that's where you'll see the name from. And Neato Student is as an operator, we've invested very heavily in that. It's heavily branded. It has what we call a very experiential view. So we don't just offer rooms for students to live in. We offer a very comprehensive social program. We have a very comprehensive view on sustainability. We look at building communities. We look at student well-being. We do a lot of the soft things that you can do when you've got 800 beds in one place, rather than having lots of people dispersed in two-bedroom apartments around the city. So we try to build these communities and add something to the areas where we develop. And one of the nice things that I've been able to experience in working in such a scale is it's very much being a landlord. It's very much like what you guys all do and what I do in my build to rent, my buy-to-lets that I personally have, but on a bigger scale. And if I park one of these 300, 400, 500 bed residences in a neighborhood, then that accelerates the growth, accelerates the gentrification of the neighborhood. And I remember building one in North Acton where there was nothing there but a tube station, and now there are 10,000 residents in that area. But the catalyst for that revitalization was the development of the student housing. And if you look at Shieldfield now, you've got loads and loads of these student housing blocks, and that whole area has been transformed from an area with a bit of social housing and a bunch of disused warehouses into a more vibrant community with a few thousand students living over there. And indeed, as we've seen the growth of the universities, they've been positive for most city centres, because without the universities in a lot of these city centres, there isn't that much going on. So I guess we're passionate about operating student accommodation. We've won a bunch of awards for the way we've operated it. We try to treat the students really well. We try to offer a kind of hybrid between living in the parental house, living in student halls of residence, and living in the wider rented sector. So that's kind of Neato as a background, and as I say, we're vertically integrated. We think that owning an operator makes us a better investor, and the drives better returns from the underlying investors. But PBSA is the rather unsnappy acronym that we call purpose-built student accommodation. So what is purpose-built student accommodation in short? These are big buildings. They do start at 50 beds, but the sweet spot starts at 250 beds, where you get to quality economies of scale, and the buildings are far more efficient at that point. As a rule, all of the rooms pretty much that have been built in the past 10 years have been en suite. That means you have typically a prefabricated pod bathroom with a shower, wash, hand basin, and a toilet. We find the students find that really appealing. More and more people, more and more kids that are going to university have en suites at home and expect or like having it at university. But these things are big. 250 bed accommodation blocks. An average price outside of London would be about £100,000 a bed, an average value of that. So the assets start at a value of about 25 million, which makes them out of the reach of most local heroes and local investors. Maybe they can develop them, but they usually can't hold them. But that means it's the big institutions who are investing in them. And what do they need? They need these buildings to be super safe. So we know Legionella backwards and forwards. You really know Legionella if you've got to flush 600 toilets, wash hand basins and showers every week for 10 weeks before the building opens. They're just getting that done is a logistical nightmare, as you can imagine. But for an institutional investor, an institutional high street bank working with us, they need to know that the buildings are going to be safe and we're not going to have wild Legionnaires outbreaks at the residences. Fire safety issues are huge. The big issue in the sector at the moment is cladding, and you've read in the press in Newcastle about Liberty, for example, near the football ground, having to close down a building for over a year while they reclad the facade of the building. No, it's less of an issue in these assets, which are generally freehold, generally owned by one investor who's a massive company who's not taking any chances, who can take a building offline for you and afford to reclad it. So it's less of an issue for our sector. It is an issue, but it's being worked on much more quickly than it would be in a multi-tenanted building, a leasehold building, effectively. What else do investors like? They like more universities than one in a city, in case one has a bit of a blip year. Location can be city centre or near a university. So in Newcastle, we know the city centre is where the universities are. That's not always the case. If the university is remote from the city centre, then you might be somewhere with good transport. Good liquidity, that means will somebody buy the building after you've had it? And the sector is very popular, and we'll see that in a second. What else do we do? The big buildings, we have 24-hour security, modern facilities. There's an increasing number of operators who are very good at filling the rooms full of students. Most of these buildings, most of the time in most of Europe, have been nearly 100% occupied for the core period since they've been built. And the core period is 40 weeks, 9 or 10 months, with typically students don't have to stay in the summer, but they can if they want. Which hence 10 weeks of toilet flushing for the staff. Students have spectacularly low levels of bad debt. Typically, the sector doesn't do any reference checking whatsoever, but we sign the students up to relatively robust ASTs, just like you would with a normal tenant. But the arrears tend to be low because we tend to, if they're an international student, they tend to pay up front for the year. If they're a domestic student and can provide a UK-based guarantor, then we tend to have a parental guarantor. So typically debt levels in the sector would be less than half of 1%, which when you deal with a 10,000 bed portfolio is great for an investor. And banks really like it as well. So the debt markets are really liquid. We can achieve really good levels of debt at reasonably high loan values. And there are reasonably high barriers to entry, availability of land, and increasing development costs are starting to slow down the pipeline. So you don't want anybody to substitute your asset, but we are seeing, certainly in somewhere like Newcastle, where there is still a lot of brownfield site available, we're seeing people build closer to the city centre and closer to the university. And I know our friend Ian Balliot and I just struck a deal with IQ to build 1,200 more student rooms opposite City Campus East, which is a great location. And if they can deliver it for a reasonable price and at a reasonable rent point, it should be a successful development. And then common spaces. So a lot of increasing number of common spaces, less of a thing in COVID as we've had to close them all down, but these things are brand new, state of the art. They've got gyms, they've got cinema rooms, they've got music rooms, they've got yoga studios, they've got, you name it, these things are great places to live, and you'd happily have any of your kids living in these residences. So Neato Student, like a lot of these other operators, have very comprehensive approaches to design. We've got a 450-page Neato Blue Book, which tells developers the sort of thing we like to build, but we adjust it for every location. And here you can see on my screen a typical ensuite room layout, which has a bed, a sink, bed, a desk, wardrobe, wash hand basin, toilet in the ensuite room. And we can build these really efficiently. And typically we'll have 4, 5 or 6 of these ensuite bedrooms clustered around what we would call a cluster kitchen like this, which is a kitchen with all the amenities you'd expect. And also have a lounge area, TV, dining room table. And the way we tend to look at this, we try to get everybody a bottom cupboard, a top cupboard, a shelf and a fridge, a shelf and a freezer, and a soft chair to sit on, watch telly, and a hard chair to have your lunch. So it's very formulaic what we do, and in the 15 years I've been doing it, we've developed this to the point where it's tough to change it any further. We like to have 80% of the rooms in this formation, and the 20% of the rooms remaining, or 10 to 20%, in what you would recognize as a self-contained studio apartment here. So we do have a number of these as well. And what I like to do, a lot of people in my sector go for this super tight end of the bell curve, the top 2% of students by affordability. Let's build in Newcastle, let's charge 250 quid a week rent, and let's target this market. But if everybody targets that market, then everybody beats each other up and fights to the death. So what I like to do is to appeal to the biggest part of the bell, the fattest part of the bell curve we can in terms of a rental point. We're never going to be able to build it cheap enough to attract somebody who can only pay 60, 70 pounds a week. We need to be getting the guys who can pay 100 pounds plus a week in this market if we're developing something. So that's the 100 pounds a week plus. If you ask people what they want to pay, they'd always say they're down here. But if you ask them what they are paying, they'll always say they're up here. So in practice, that's kind of where we've ended up. Be nice to do more affordable, and it's a big story in the sector trying to deliver more affordable, but it's proving very difficult. So in HMO land, I think if we're seeing more affordable rents, we're not really fishing in that pond as a sector. But why do investors like the sector? And this is a wider residential story as well. So if you look at this line here, this is the sort of return you can get, the net initial yield you would pay for an investment in purpose-built student accommodation. So if you look at your income, take away your costs, and then what return would you expect to achieve? So what will you pay for the asset? So we're looking at this sort of this return of 6% for students. But what's more interesting is that the student property is slightly cheaper. There's a negative correlation. The student property is slightly cheaper than the residential equivalent. So that's what attracts some investors into student accommodation. So you get more return on your money in student accommodation than you do in resi. So people like that. But fundamentally, what is the real story here? The real story is that this residential accommodation for a global investor gets a much greater return than the risk-free return down here, which is, as you can see, the UK 10-year government yield sat there in 2020 at 27 bips. So you're making 6% return on your money rather than 1/4% returns. That's what investors are doing. That's what they like, and they like UK stable-ish currency. The kind of Brexit pain seems to be out of the way. So investors like investing in this because this is how they're making returns for their investors. If you're a massive Canadian pension fund, you've got massive net inflows at the moment because you've got a young population. So every month you're getting billions and billions of dollars thrown into your investments. You've got to put them out somewhere. You've got to get a return. And why not UK purpose-built student accommodation? Just getting you slightly more return than resi. So, and if we look at this left-hand chart here, this is what's happened over the past 5 years even in purpose-built student accommodation or in the wider residential property investment sector. And this is really interesting to see. In 2015, something like 40% of all UK investment in property went into the office sector. But in 2020, you see that how much it's dropped off as people are driving up the values of the office. They drive up the value, the return gets lower, and you pay more for the building, the return gets lower, so it gets less attractive. So you see, oh, my mouse keeps jumping around, sorry. So it gets less attractive. So in the 5-year period, far less money gets invested in offices. Same with retail. Who wants to invest in retail between 2015 and 2020? It's kind of dying off. So seeing these traditional property investment classes becoming less and less appealing to institutional capital. So other things are growing up. They still have a massive weighting of money they need to put into some sort of property. And in Europe, in this case, some sort of property in the UK, where's it going to go if you can't put all this in offices? It's got to go somewhere. You can't put it in retail. So that's going backwards. And in many respects, hospitality is becoming harder to invest in. And 2020 is the first year of the pandemic. So where's it going to go? Well, people still need somewhere to live. So multifamily investment, this is built to rent. So there's towers of residential accommodation, typically for people who aren't students for not students. The investment in that has gone up massively over the past 5 years. So retail's down, office is down, hospitality's down. Multifamily's gone up, it's residential accommodation. Student housing's gone up, which is like a subset of multifamily really. And industrial's gone up as well. So that's industrial, light industrial and logistics. Think Amazon, think last mile delivery, more and more investment going into that as well. So really interesting. So you've got the same amount of money that was going in there has to come somewhere else. And that's driving up the price of student accommodation and driving up the price of institutional multifamily. So for one of you guys who has 200 houses to rent, if they were in one block, you would have seen the value of that block go up dramatically as these institutional investors are dying to get in. And here we've seen another interesting point where the risk's moving around. So 16, 17, 18, you see the weighting of private equity, high risk, high return money in the sector here. 2019 was a really stable year where the asset class really came of age. And you see the institutions, the pension funds, sovereign wealth funds in 2019 made up the lion's share of investment in the market. What happened in 2020? COVID came in and we saw a massive private equity step into the market. And that was mainly driven by Blackstone's acquisition of the IQ portfolio, which was the largest UK property transaction ever. And that was in purpose-built student accommodation back in 2020. 2021 is much more choppy. There's not as many transactions gone on yet. The 50% of these transactions are my transactions in the UK, which were selling about 300 million of assets to Greystar. which effectively are a large multinational balance sheet investor. So, and then, but why are we doing it? So, well, there are loads of students, and there are more students. So, for people who've been landlords in Newcastle a long time with houses in Jesmond or similar, it's not that these student accommodation guys are eating your lunch completely. It's actually the case that there are more students. So from 1994, you can see the applicants to the university here, more than which is people who apply to university going up and up and up, people who are accepted at university going up and up as well. So a clear correlation between the two. And then you see around the times there have been recessions, you'll see more people applying. So recessions are good for student accommodation. But what's else is driving this is the growth in international students. So international students have greater propensity to require accommodation. So they've obviously got nowhere else to live. And they've been growing like crazy up until 2017-18. So these charts go up to 17-18, show you the long-term trend. There are more students, and the students that there are more likely to want accommodation. And actually what this doesn't show is there are more traveling students within the UK. We call them nationally mobile. More students going from Newcastle to Manchester and Manchester to Newcastle and everywhere else across the UK, all of whom require accommodation, and lots of whom are seeking this purpose-built experience because it's on-street, all-inclusive rents, everything else. And then in the last 5 years, here's the international line, continues this crazy growth, slight dip from 20 to 21 as we've got the COVID pandemic affecting international mobility. But the UK students are taking a massive upkick between 20 to 21. So we're seeing the overall number of students in 2021 going up quite dramatically. And that's UK students. That's because, guess what? There aren't as many jobs around. If there's not enough jobs around, I need to give myself an edge in the recruitment market. So I'd better go to university or stay at university or do a master's. So we're seeing this kicker here, directly correlating with the unemployment rate going up in the general economy. And we're seeing the same as we saw in the financial crisis a few years ago. So many more students, and government policy is super supportive. So government want to boost international students since they've got themselves in all sorts of hot water about Brexit, jobs are falling off a cliff, and all this disruption running the borders and all this stuff. The government's painting themselves into a bit of a hole. What's free money to the government, to the exchequer? It's international students are hugely accretive to the economy. They bring a load of money into the economy, and they don't tend to stick around afterwards. They tend to take that back up, take their education and go back home and add value to their own countries. So they don't add to the immigration figures, and they do bring loads of money to the exchequer. So loads of positive indicators on international students, providing they can get through the borders. But here we see the Brexit effect. The first year that's really affected EU nationals, 40% reduction in EU national figures coming to university. Very widely predicted because suddenly EU students are paying full international fees, which effectively quadruple the fees that they will be paying to come to a lot of UK universities. So the French and the Italians are falling off a cliff, but UK applicants up dramatically, and non-EU applicants also up dramatically. The Chinese are coming, and they're coming in massive waves at the moment. So seeing more and more Chinese students. What effect is COVID having today on booking in the PBSA sector? Well, in 1920, this was the line, kind of pre-COVID. This is people booking in during the course of 2019, before the pandemic. The sector was at 100% occupancy, pretty much. The demand curves, they look like this. That was all pretty vanilla, pretty steady, normal year. 2021 disrupted by COVID dramatically. You can see it coming up here, the lines flattening off as it all started to take effect. So a little bit behind where we were the year before. 21, 22, these figures marching on, and because the first years are affected by whatever's going to happen with A-level results, we don't know yet. So they're all holding off. But this anecdotal research amongst the sector, when do students plan to book for 21, 22? Actually, we can see, and this has changed from previous years, 38% of students want to book in February, March, and April. 61% don't want to book until after May. So students keeping their powder dry. What's going to affect the sector will be interesting to see if people hold their nerve on rent, because this is very much a marketized sector, as unlike residential. In student, if you haven't got your rooms full by September, you're dead for the next 12 months. So you're going to incentivize, some people will discount. So there could be a race to the bottom, which investors are nervous about. But people, I suspect the sector as a whole will hold their nerve because students are going to boot late this season and everybody's kind of ready for it. So interesting when you do a job like mine, for sure. But what effect is what does the future look like for student accommodation? Well, this is really interesting because the growth rate in new beds coming out in the UK is the long-term average at 5%. 2021, we're tracking way behind at 3.10%. Bear in mind those 8% annual compound growth in 15-16. Look at it this way, right, in 14-15, there were 120,000 beds under construction, and that would have been launched in over the 3-year period. Right now in 2021, there are less than 30,000 beds under construction. So the additional supply of purpose-built student accommodation is beginning to dry up across the UK. And it's drying up for a number of factors, not least the fact that development costs are spiraling up, construction materials, disruption to supply chain, meaning that people are having to create additional contingency lines across the sector, and the fact that certainly in the southeast, most of these things have been built by European builders coming to the UK to build student accommodation. The whole of London's been built by Polish builders the past 20 years. Those guys are going home, labour rates are going up, and it's harder to get contractors to sign up to contracts. They can't guarantee supply chain, they can't guarantee labour, so they're running scared. That means it costs you more to build it. You can't charge that much more rent than you could do when it cost 40 grand to build it, and now it's costing 90 grand per room to build these things. So that's starting to curtail the pipeline. But overall, you can see the sentiment in the sector from investors, from student occupiers, and from the senior debt markets for September 2021 has all improved, and everybody is confident that it's a return to largely business as usual in September. Students want to go to university, and investors and universities want them there. And what's that done? The scarce supply of these prime assets so lots of investors, hundreds of billions of dollars of capital is trying desperately to find a home, can't go to shops, can't go to offices. It's having to find it can't find enough stock in the regular private rented sector because it's too fragmented and held by too many individuals. So it's finding its home in student accommodation, logistics as well. So, and we can see here yields staying stable in those secondary regional and tertiary regional. So if you're not sure that there are enough students, if you're in Plymouth and the university's going backwards, not forwards, or Cumbria or Teesside, then you're going to discount those, and they're not going to be as attractive to your international investors. But here we are, Central London direct let assets. I've got this asset on the market at the moment. Off the record, it's we bought that for 60 million. It's 5 years ago. It's under offer, or it's about to go under offer for an excess of 120 million. And that's because these yields have been driven in. So somebody's going to pay less than, get a less than 4% return for investing 120 million quid in this Central London asset. And that's a factor of cheap debt, needing a home, it being London, very, very rare product. And it's very, very, very thickly bid. So the message is the prime assets are getting more expensive and more desirable. The secondary assets are getting less expensive and less desirable. And the sector continues. But I think the moral of the story is I see a slowing down in the development pipeline. So I don't think there'll be as many of those big blocks coming out in cities like Newcastle. So I've whistled through that because there's been some long presentations. I accept that it's perhaps a little bit different to the kind of things that you talk about in this session normally. But hopefully it was of interest. I find it interesting, but maybe I'm a bit of a PBSA nerd.